This is Salim Rajani, real estate agent over here in Dallas, Texas. Today we are again come up with a very significant and most important topic for our investors especially. Today again with me is Mr. Amin Hirani.
Hello, everyone.
He is a qualified lender and loan officer engaged with Barrack Financial Group. Today he will share his wisdom on DSCR loans, which is highly useful for our investors, especially if you are dealing with the rental properties. So let's jump into more details. Welcome, Amin.
Thank you so much, Salim, as always. Pleasure having you. I'm here. I'm happy to be here. Yeah.
Perfect. So can you explain about what is mean by DSCR loans?
So DSCR is abbreviation for debt service coverage ratio. So debt service basically. So this loan is specifically for individuals who wanted to, or investors who are more interested in expanding their portfolio of rental properties. So this is focused basically for individuals who wanted to get into rental properties and can increase their portfolio accordingly. Okay. And the main
specifically rental properties. Only
this
for
is for rental
rentals.
properties. It's not for primary residence. It's just for investors focus on getting rental properties, because the program, the reason it will explain you. This is focused. So when we qualify you is based on the cash flow of your rental property. This is how we qualify, the lender qualify you on DSCR loan. We do not need your W-2s. We do not need your tax returns.
Okay.
There's no personal income is included. It's just based qualifying you on the net operating income. The cash flow of your rental property.
So for example, if I am going to invest in new construction and I have planned to rent it out that property, so do I qualify for DSCR based on this kind of
Yes,
scenario?
you can. It's all because it's not been rented out yet, because but it has to be a ready property.
It has to be ready.
It has to be ready property available, because we need to do the appraisal for this thing.
Okay.
So even if it's not rented out, we have the option. If either it can be rented out for long term, like 1 year lease or 2 year lease, you have it, or if it's not rented out but it's a ready property and you wanted to get a DSCR loan against it. So there's a rental appraisal. We need to do that rental appraisal.
Okay.
But rental appraisal, you have to do it regardless. I mean, either it's rented out, it's not rented out, but appraisal has to be done. And whatever the lowest amount comes out, either it's already rented out property, if it's whatever the rent is there, and whatever the appraisal comes up with that comps of the rental comps of that area, we will go with that rental amount. Based on the amount, correct. But again, let me bring this up one more time. Qualification on this loan is completely based on the cash flow of the property, rental property, not on your personal income.
So so then what is the criteria?
Yeah.
Let's say if I have to buy a property, then how you will evaluate myself?
Yeah. So first of all, there's a limit of 20 properties you can do it. One after the other, because you have to increase your portfolio, right? That's for the investors basically. The criteria simple of this loan. There's a way of calculating this loan. Simple is basically your net operating income of your property divided by debt service ratio, which is so if, for example, your property is producing your rental, currently you have a property which is already rented out, you want to buy that property, right? We would ask you, what's the rent up there? For example, the rent is $2,200 per month, right? And the PITI, this is what we looked at when we total debt. What we are counting is principal, interest, taxes, and insurance.
Okay.
Nothing else, right? So you divide by your property rental income, divide by your expenses, which is PITIA. Homeowners Association is included in this thing.
HO is also included.
That's why we call it PITIA, right?
Okay.
So and you divide this thing, and since your income is your rental is more than your expenses, which is a positive cash flow, right? So your ratio is going to be like, for example, 1.1 or 1.2. It's over 1%, which is a positive cash flow. So this is how you will get the better rates, and this is how we calculate accordingly. If your rent is $2,000, your expenses PITI is also $2,000, which means its ratio is 1%. But you have to have a ratio of 1% and more to get qualified.
Okay.
But again, there are some lenders which are offering lately even less than 1% ratio. But those are specific lenders, but they have some strict guidelines for that thing, to do that, but can be done as well.
Got it.
Right, so the criteria you were asking me, so this is the way we calculate it. And of course, there are different criteria on the credit, like for credit score. On this one, you have to have like 660 plus credit score to get qualified on this. 660 plus credit score. And the down payment, it has to be at least 20% down.
Okay.
Right, so this is the main requirement to get qualified on this thing. But this, yeah, again, with no tax returns, no W2s, no personal income we needed on this thing.
And so what would be the interest rate?
Yes, interest rate on the standard typical conventional loan what we are getting for primary residence is I would say 1 to 1.5% more than the standard. But lately I'm seeing very competitive rates, so I would say 1 to 1.25% more than the standard rate. For example, the rates currently is 6%, right, on the primary. You will get this one from 6.99 to 7.5% in between that, right, rates.
Got
DSCR.
it. Got it.
Correct.
And are there specific lenders who deals with DSCR?
Yeah, so they are specific lenders, not every, because these kind of loans are considered to be non-qualified mortgages. They do not fall under qualified guidelines, which is standard guidelines for FHA and conventional loans for Fannie and Freddie. These are non-qualified mortgages, this is through the private lenders, and each lenders have the different guidelines. They create their own guidelines. We have to go, but the standard guidelines which I just mentioned, this is the way we calculate it. Yeah.
Okay. And what is the ratio? Means how many people qualify? What is the rejection ratio?
Yeah, so there are some, if you fall under certain guidelines, like I said, credit score plays a vital role. Your down payment, it has to be 20% down to get it. More down, better rates, right? Again, like typical lending goes with better in credit score. But if it's 700 plus credit score and you're putting 25% down, rates will be comparatively much better than what you're getting on this thing. There's some caveat in this thing. Like there's a prepayment penalty included, which people are not mentioning, but I think we should mention this thing as well. So there are like prepayment penalties included. If you get a loan in this thing and next year you try to sell it, or something, but there are 3-to-1 prepayment. So first year if you're selling it, it's 3% of the loan amount you have to pay it. Okay. Second year and third year, and then it's yours whenever you want to, whatever you want to do it. So there are prepayment penalty on this thing. And to initial qualify, I would say 3 to 12 months, depend on your down payment and all that thing. You need to have the reserves in your bank to cover that PITI amount.
Oh, okay.
That the reserve beneath that thing. So those are the small, like you said, what criteria. So those are, but other than that, it's a typical way of qualifying you, like any other loan, right? But again, no income of yours. It's all focused on the rental income of the property.
And can we do the refinancing?
You can do that. So this is a good part about most of the people, like they had hard money, they took it. Right now they want to get out of it. So we can do this. So DSCR is the one where we can get you a cash out refinance as well. You can do purchase refinance, you can do cash out refinance as well, and you can do rate and term refinance as well. So there are all options available on DSCR. Lately, I'm seeing a DSCR interest only payment is available as well, which is for 40 years. So some people are stuck, in some kind of hard money loans or something.
Yeah.
Want to get it out of it. We have interest only payment for 40 years. So their cash flow is going to be much increased, and they can get out of that stricter loan comparatively with a better interest rate. So this, and again, I think one more good part about it, this is not going to be, the lenders would not report this thing to your credit. Your personal, it's not going to be on your personal credit.
Oh, that's
nice. Very nice, because that's how you're going to increase your portfolio, right? Otherwise, how many debts you're going to put on your, so unless it will be reported, lender, they have in the contract line that if any delinquent, if it happens, like you missed a payment or something like that, then they're going to report it to you.
So means people who are buying properties on conventional loans and then for the rental purpose, so instead of doing this, they all should go for DSCR loans.
DSCR, right? That's the reason is getting, but only thing is if you have enough, your income supports enough to get an investment property as well, the rates are better in the conventional, right? Because on the conventional, from primary residence to investment property is half a percent difference. If it's for 6%, you can get it for 6.5% for investment property on conventional loan, right? On the regular one, but on this one, the rates are higher comparatively. And then there's no prepayment penalty on that one. This one has a prepayment penalty. So those are some of it. But again, not everybody's income can support 5 properties, right?
Yeah.
5 rent, but you want to grow, increase your rental portfolio. Real estate is something eventually is going to pay you off, right? So if you have like down payment for 20% available, and you have decent credit, we don't need any other income. We just go with your rental property.
Perfect.
So yeah.
Perfect.
Any other?
Anything else?
Yeah. So I think I'll just go over one more time if there's something I'm missing out. Short-term rental, Airbnb, that can be done too on this
Okay.
thing.
Nice.
Yeah. So some different guidelines on those things. We look at the average of the yearly average, but we can make this happen too on this thing. So yes, so any investors looking for increase their portfolio on the rental properties, investment properties, I think DSCR is a very good choice, and it's getting
Nice.
very popular. Yeah.
Okay, perfect. So that's
And again,
interesting.
again, more questions. I can advise more.
Yeah, then the circumstance is different. Everybody's condition is different.
100%.
Income levels are different. So,
And
but this is the broader idea, which is very,
I
very
gave
useful
you
information.
definitely, and most people are not even aware of it. I mean,
Yeah.
they think that, and they have a primary residence and they want to do investment that the income doesn't support that thing. To get both the mortgages on one
Yes.
income, then this falls
And
out.
especially in this current real estate industry, the real estate market is down.
Correct.
And people have so many rental properties, so they can look into this option if they are having any kind of financial trouble, right?
Yeah. I mean, like I said, I mean, anybody got a rental property which with the intention that it's going to grow and we can sell it fast, things change, right? Like this time market is kind of a little shaky and a little different. So if they're stuck with the private lenders for some reason, with the higher interest rate, with the intention that we're going to fix it, flip, and we can flip it, and it's not happening. They're stuck. They are stuck with 10-11% interest rate. People have got from private lenders or or hard money lenders or something like that. We can help them out, cash it out,
Nice.
cash out refinance on this thing. We can pay off them with a better interest rate, and now you earn a decent,
Perfect. So hopefully you liked today's topic, which is very important for the investors, and they can use this as an opportunity. If you have any questions, there is no money in asking questions, so you can feel free to ask Mr. Amin
Sure.
regarding all kind of your technical questions. You can also reach out to me for any kind of your real estate needs. My number is 817-918-5696.
Yeah.
You can also have the number of Mr. Amin
sure.
as well.
You can reach out to me at 405-410-8663. Happy to answer any of your questions.
All right.